Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the 3 outside down reversal candlesticks pattern. The 3 outside down pattern is just the opposite of this. The market is in an uptrend. The first candle is white or green. The second candle is black or red that fully contains the first candle. And then the third candle is black or red with a close lower than the second candle down here. So that would be a bearish engulfing. If this is black or red and this is green, right? Bearish engulfing. Price is going to fall potentially. That's where it's signaling a potential reversal to the downside. So let's look at several different 3 outside down patterns. I get confused with all these patterns. Sometimes there's 3 inside up, 3 inside down, 3 outside up, 3 outside down. So this is 3 outside down, right? So let's go take a look at several real world examples. Ford. This wasn't really in an uptrend per se. This is kind of trading sideways at the moving average lines. Very important. Again, price, the more it gets overextended, either way, whether it's overbought or oversold, it's like a rubber band. It wants to snap back to moving average lines. Now, many a times, again, when price is at moving average lines, you can see all of this indecision. This is so difficult to trade a stock like this. It needs to eventually choose a direction so you could either ride it up or down, right? So, as you can see here, this is a major warning. Before this even happened, this right here was a gigantic warning sign that said big bearish candle enveloping kind of a smaller, spinning topish kind of candle right over here, right above the moving average lines. And then this third candle confirmed it, right? Closed below the second. So bearish engulfing right here, these two candle. The third closed below the second, 3 outside down, and then this obviously just completely. So this is a really nice looking 3 outside down pattern. Let's look at several other examples here because I like repetition and I like to show you guys diversity on charts. 3 outside down. Let's move over here. So price was a little bit overextended. It was kind of right on the RSI, broaching a little bit higher, right? You have this red candlestick here engulfing this green one. Not, it's not the perfect bearish engulfing, but hey, it's contained within inside this real body of this red candlestick. Third one closed right below it. Look, no coincidence, all happening right around these moving average lines, right? And then you get some dojis going on over here, and then it kind of just messes around. So it's a potential reversal pattern. This is your warning right here. Once that red candle envelops it, that's a potential look outside. We're looking to potentially reverse and go to the downside. Let's take a look at ADI, another one that was trading sideways. Bigger red engulfing candle, engulfing this green one right here, that spinning top. And then you can see third candle closed below, right? And so that's a 3 outside down. Again, happening all around these moving average lines. So incredibly important to be aware of. Let's take a look at Goldman Sachs. This one right here was moving up, right? Kind of getting at a peak level. Again, be aware of support and resistance. It was just breaking above that resistance candle right over here, kind of this double top area. Broke above. Boom, this big red candle came in and engulfed this green one, and the third candle closed below it, right? So again, when you see this big red candlestick engulfing that one, that's something to be, to look out, be very, very careful of, right? Early warning signal. Netflix right here. Price really overextended over here, wants to naturally gravitate back. Big red candlestick, kind of covering that spinning top or doji candle. Third candle closed right below, teetering around these EMAs, and then kind of bounced around, got a little crazy wacky stuff going on there. But again, reversal pattern. You can see right here, this is kind of an evening star pattern. Green candlestick, doji or spinning top up top, and then boom, third candlestick fell down all around these moving average lines. See, reversal pattern at moving average lines, reversal pattern far away from moving average lines, right? Price wants to snap back to those moving average lines like a rubber band. SMTC, you can see over here, RSI overextended. If you zoom in Again, over here, kind of at a top, you got kind of that spinning top. This bigger red candle engulfed it over here. This third candle fell below it. This is your warning sign. This is confirmation. Now you got to watch out what's going on here. Bounce, bounce, boom, fail, right? Doesn't mean it's always going to keep failing, but you got to watch the other patterns that form. This is kind of like a head, kind of a left shoulder-ish area up here, kind of a right shoulder here, a little bit of a fake out, and then it failed right below the neckline of the head and shoulders. Again, if you're not sure of these patterns, take our course. We go through all of these patterns pretty much in our course, and they're all important to be aware of. 3 outside down pattern here, right kind of trading sideways, kind of almost like a double top pattern. You can see a top here, kind of failed again over here, and then you have almost like a double top, and then this big red candle, kind of bigger, not huge, kind of enveloping this spinning tops indecision. Third red candle failed down here, down below the moving average lines, and then obviously the moving average lines crossed over and started to fail. Let's take a look at one more, JBL. If you zoom in over here, look at this one right here. Big red candle, kind of enveloping this green one. The green one is still kind of a bigger candle, but this is a bigger red one, enveloped it. Third one failed, crossovers down on the moving average lines, and price just kind of entangled, just fell. But again, you can see price when it gets down and far away from the moving average line, or far away from the moving average lines, it wants to bounce back up. But then there's other ones like, here's the 200 SMA. You had a couple bounces off of that to push it back up, right? Many times it'll fail, many times it'll push back up. Moving average lines, huge support and resistance areas, but they don't matter unless you know candlesticks first, because you have to know how candlesticks work in relation to the moving average lines, right? If you're not a member of our community yet on Facebook, come and join us. We are the Bullish Bears. You will see right up here, we call ourselves the stock market community, just to differentiate ourselves from our fan page over here. So make sure to like and follow our fan page as well as join our Facebook group. You will notice when you join our community, we keep all the spammers, the trolls, and the stock pumpers out. So we run a really good, clean Facebook group. So if you want to join a community of other traders around the world, make sure to come and join us. Also, too, if you have not been over to our website, head over to bullishbears.com. You'll have the links below, and you'll see over on our website, we'll have several different trade rooms over here. We have a day trade room, we have a swing trade room, a futures trade room, other great areas of support. So not only do we have our Facebook community, we also have our trade rooms that are open 24/7. So you can talk to traders from around the world anytime, day or night. And it's a really helpful resource, especially if you're new and just getting started in the stock market. It's nice to have other traders around the world as support. So we have our several different trade rooms, our Facebook group. We also do watch lists and trade alert setups every night. We send out key breakout and breakdown areas on our alert service each night. We are not stock pumpers. We do not call out entries and exits. We help to teach you to become your own trader. So again, we help to guide you, but we're not calling entries and exits because we are not stock pumpers. So make sure you read about our alert service over here if you want to know how our trade alerts work. We do also have thousands of dollars worth of free courses over here to help you get started. So if you're new, give yourself a few months to get comfortable with trading. It takes many traders, a few months, if not a year plus, before they get really comfortable. And that's why we suggest taking our free courses and then practice in a virtual account like Thinkorswim or Interactive Brokers to really get comfortable. Make a few hundred practice trades, practice in our trade rooms, talk to other traders around the world, and just get yourself comfortable with trading. And then when you're really comfortable, then start trading with real money. You'll see right here, we also have our ebook, so make sure to grab that. We have a free candlesticks ebook as well as our wallpaper backgrounds as well. So we offer so much value to our community members. So if you are not a member yet, make sure to just click the subscribe button over here and you can come and join our community. And also don't forget, if you like this video, make sure to like it, comment on it, and share it. We would greatly appreciate it. And we will see you in our community. Enjoy.